is ripping.
My tummy hurts.
Pretty good, right bad. Hey guys, what's going on? Nick with Off the Chart Trading. I will be doing tonight's video for Tuesday, the 22nd. What is it? 2/2/2/2 today. Bunch of 2 on a Tuesday. Anyway, let's just jump right into it. Kind of a, I guess, norm as far as how this market's been. Just crazy lately, especially with everything last night. I mean, when I went to sleep, I think the futures were down like 85 points or something. And then I wake up and we're flat. We're green. I think we were up by like 2 points. So it's definitely a crazy market to say the least. Let's see. I don't think that candle really does it justice as far as this type of range. I mean, funny enough, we ended up basically right in the middle of it. I wouldn't really consider that a full-on doji, but you get the idea as far as the extremes going all the way up to almost 4,400, then as low as what, 4,250 or so? Yeah. So pretty close. What was the lows from that Monday? 42, like 13 area. So pretty close. I mean, we're rocking a hard place. Like, you know, we're on the unicycle at the edge of a cliff right now as far as how this all looks, because, and I've said it a few times over the last couple weeks, couple months, that, you know, you get days like this and it looks like you're going to completely give it up, and then boom, we're back up a bit. So, but with everything going on, the geopolitical stuff, it seems like every day there's something more serious going on in Russia and Ukraine, and then nothing really new with the Fed, but still that's a lingering thing. We don't know. Are they going to do a full point? Is it 0.75? Is it 0.5? Like, obviously no one knows, and until it's a known event, markets are going to, you know, act just like what you're looking at, just up and down and a bunch of chop. So, yeah, we're basically back to September levels, undoing almost, what, half a year almost of movement in a very short period of time. But let's zoom out. So monthly still not looking too hot, and that weekly still not looking too great. So you could definitely build a case for potential lower prices, but it's just this market's been so resilient over the last couple of years that it's tough to actually, you know, when you see this, you're in a downtrend. You're closing above, or I should say, you're closing below all the major averages. You know, the EMAs, simple moving averages, whatever, you know, stuff you use. There's a good chance that we've, you know, broken trend on no matter what time frame you're looking at. Like I said, ultimately the monthly still looks pretty decent, but we're getting our first color change in basically since you know, March lows coming up on 2 years ago. So you literally have 2 years of information here, and it's the first breach of that. So pretty significant even on the higher time frames. So like I said, you can make a good case for lower prices, and then there's also a decent case saying a lot of it's already been factored in. Like, what more, you know, do we get dragged into a legitimate war with Russia? Like, obviously that would be a little more spooky than what's going on, but I personally think, like most of these types of events, it will be something that no one's really talking about in the next probably month or two. We'll just have to see. That NQ squeeze did end up firing short. I was just looking at the ES one. It looks like the ES one did fire short as well. Granted, these don't stop trading until, what time is it? Doing actually the video a little early because I got to head out in a little bit, but it's almost 4:30, so technically this will be trading for another 30 minutes. So I guess if we get a pop, maybe this goes back into being in a regular squeeze, but it's only a 5-dot squeeze, but it has officially fired short. We've talked about it before. NQ definitely looks a lot weaker. One of the levels I gave, and this is obviously going to change depending on where the EMAs are at, but it was pretty close. It was like, I think 13,500 or so if you go back like 3 weeks ago. When I was looking at potential levels of support on the monthly, I was saying the 21 probably would make the most sense. And we finished down today, but, you know, like even today after Biden spoke, we actually did see a significant amount of buying. We went green on the day, and then we gave most of that back, and then here we are. So is it, you know, obviously feasible that we drop another couple hundred points and test this in this market? Absolutely. So that would be somewhere I would keep an eye on as the potential first support level on the monthly on the higher time frames. Let's see, take a look at the Russell. Honestly, I didn't look at the Russell at all today other than my 15-minute chart. This one still has not fired. Momentum shift over the last 2 days is a darker blue, so it is kind of, you know, running out, even though it was only, I guess you could say 4 days of upward momentum. you're kind of slowing down here a bit. So hasn't officially gone short yet. We'll just have to see if it gets dragged down with the other ones. But as of late, the Russell's actually been holding on quite well. So, and there's a good chance that it could be the thing that actually leads us up or down, depending on which way this market goes. We obviously talked about that weekly squeeze firing short, and here we are 4 weeks into it. So a month into this downward pressure, and we're just seeing that move play out. Monthly, definitely not as bullish as the other ones. I mean, we came all the way down to the 34 in the monthly, which we haven't done since, once again, March lows. And here we are right below the 21. So we'll just have to see. Like I said, it's kind of like thin ice, whatever, you want to visualize where the market, eggshells, walking on them and so forth. It's like I said, we're right there. It's obviously very, I don't want to say frothy because we're obviously off the highs, but it's a high probability that we do end up seeing lower prices unless this whole Russia thing kind of gets swept under the rug or nothing more comes of it. Fast forward to a couple weeks from now. I mean, it's going to be right around the corner. Was it I think 3 weeks from now, give or take, from when the next meeting is, and there's a good chance that they'll raise rates then, or not sure if by raising them it takes effect in April or they do it in April, but regardless, we need to be aware of it. I think it's the 14th, 15th, 16th, one of those days, for March. That's obviously significant. Maybe it's the 10th. I don't remember off the top of my head, but I'm just going to say about 2-3 weeks from now. But as we get closer to it, we'll see how this all pans out. That Dow squeeze that's been in for, since August of last year, the momentum is shifting lower. So this one does fire short. This one could have a lot of power to drag the Dow down. And that's one thing, is ultimately the Dow is actually not looking too bad, all things considered. But that's mainly because of the weight, and obviously having the bigger companies in the Dow. Because if you look at the Dow, I mean, it's not really that bad, but there's only 30 stocks, and then you look at the Nasdaq, and 70% of them are below their 52-day, or they have new 52-week lows within the last week or two. So, and S&P not looking too hot either, other than the heavier ones like an Apple, Amazon, and so forth are holding us up pretty nicely. But other than that, everything else has been, some stuff down 40, 50, 60, 70% from their highs in a very short period of time. So it kind of begs the question, how much lower can it go? And obviously it can go a lot lower, but I don't know. I don't think, what I do? I'm removing things, clicking things. I don't know what I'm doing. But I'm not looking for end of the world type selling or anything like that. But just because I don't think something's going to happen doesn't mean that you don't want to be, positioned for it or being aware that it can happen. Because I think that's where a lot of people get, their heads ripped off, is when, it can't go any lower. And then sure enough, we're, way lower than whatever they initially thought it would be. So just something to be aware of. Like I said, I mean, it was interesting. The beginning of the day's price action made sense to me because, once again, as soon as those futures opened at 6 p.m. yesterday, we had that pretty big gap down. And, it's almost like everything that could have happened negatively, you thought it would have already been done with. And then sure enough, 9:30, we did actually end up seeing, for the first hour or so, a good amount of buying. And then boom, the norm set in, and we ended up seeing some selling, some broad-based selling and everything. Funny enough, called the bottom in the room. I didn't play that. I played a little bounce somewhere over here, but I didn't play this bounce right there. I know some people in the room did capitalize on that and did well. But like I said, you can't overstay your welcome in this market. You got to be in and out, and base hits, not going for home runs right now. Breath ratios were pretty bad, not horrible, but definitely built out lower throughout most of the day. Advanced declines kind of weak as well. The 10-year hasn't gotten back above 2. It had that pretty big move, and we're under that. So what is it? The interest rates are at 1.95. I'll round up a little bit. So that's obviously not amazing, but the fact that it's not continuing higher, at least I guess, is something to pay attention to. Gold is actually doing really well. Was it overnight? Over here, it was like 1918. It was moving up quite nicely, and then gave some of that back. So gold's been something I haven't personally traded at all recently because it doesn't behave the way you think it should. High inflation, this, and all the fears. You would think gold should be at 2,000 or 2,200 or something, and I will say it's a little higher. My running joke's always that it stays around 1,800. But here we are at 1900. So it's moved a little bit, but nowhere near what the markets have done in a sense of an inverse. And obviously that's how some people view it, is that it should be an inverse. Markets are in trouble. There's fear, a lot of FUD going on. There's a lot of, multiple reasons why gold should go up. They always say it's a hedge against inflation. Well, we're seeing levels of inflation we haven't seen in 40 years, and it's not really reacting. And then, in times of war or this, still not reacting. So something obviously to keep an eye on, but nothing that I personally feel like trading. The dollar, ever since it had that massive pop, has been kind of just, I guess, absorbing it, slowing down a little bit. It did drop back down. That was such a big move, because normally when you watch the dollar, you don't see these types of moves. Normally it's a slow float one way or the other, so pretty volatile. But I guess that's just been the way it's been lately. Same thing with Bitcoin, a lot of ups and downs. So it's real hard to try to even stay through with any trade, because anything that you would think would make sense for a couple days, couple weeks, you go short and you think this is it, and then boom, the next day ES is up 60, 70 points. You get out. 2 days later, we're down 100 points. So it's just definitely one where I think focusing on the shorter time frame is the best option. But like I said, not a super eventful day. I did, and like I said, if I don't take it, I didn't take a single trade in the sense of, in and out, other than that one small futures trade. But one thing I did do was, let me see, switch it back to this. Let me grab my phone. It's easier for me to cross-reference that. I guess I'll share some of the stuff I did end up buying today. I did get a decent amount of stuff. I'm trying to think. I'll go over some of the tickers I probably haven't in here, because one like this one I have not ever talked about. I just started a position today at $4 and I think 40 cents or 30 cents. This one's had a nice run when retail and everything else, kind of how a lot of this stuff was running up the end of 2020 and going into 2021. It had a really nice run from like $2 all the way up to 23. Easiest thing to, I guess, what the company does is think of the stock DNA. This would be a direct competitor to what DNA does. So it's one I've watched, and it's obviously kind of done what a lot of these other ones have done. It's just that sideways down bleed for the last year or so. So I figured once it got back down to about $4, I mean, it's still kind of on that downtrend, but it's been between $4 and $5 for several months now. So I just stepped out and started a pilot position, a starter position, whatever you want to call it. It does have earnings coming up, so we'll see. If it's bad, then maybe add a little more. If it's good, then obviously I'm already positioned, and that's kind of the way I do it. I'm just looking over here. I don't know, did I do a split or a reverse split? No, split when the 15. I guess that's why it was trading so low. But anyway, this is one that I added. So in the whole DNA and the sequencing, and I'm sure I don't think Kathy Wood has this one, but it'd be something that would probably be in what is it, ARCG, right? Yeah, ARCG is the genomics. But anyway, that was maybe one that you're not familiar with, one to check out. That, and how I've been looking at a lot of this stuff is, it got as high as 24. A lot of this was inflated from retail and just excitement and all that stuff. But when prices start dropping to, realistic levels, I think it's good to at least start a position, but don't overdo it, because this market is quick to, you feel like you got an amazing, price. The stock was $50 a year ago and it's at 8. And then literally 2 weeks later, it's at 6. And you're like, shoot, I'm already down, 20, 30%, and drops down to 4 or 5. And before you know it, you're already down 50% on the price that you thought was really good. So not that these are bad prices. My point is, though, make sure you have the right expectations at a lot of this. Know the environment, that growth is getting incredibly punished right now. And there's nothing wrong with these companies, just being aware that they ran up for not any legitimate reason, and a lot of that money is leaving. So ultimately, I think it's actually a good thing, because it gives us the ability to buy some of this stuff at a relatively inexpensive price. And if you have a longer term outlook, several years, I think it will ultimately pay off. But it's not so much of a if, I think it's more of a when. And I think we're going to be in these conditions at least for another couple months. I've been saying, since, if you've been watching these videos since the end of last year, I figured up until the Fed actually rips off the Band-Aid and actually raises rates, that we're probably going to be in this type of chop and uncertainty. And, obviously the whole Russian thing wasn't an issue 2 months ago, 3 months ago, but you add in some of that stuff and it obviously doesn't help the market. So how much of it's priced in, I guess we'll just have to wait and see, but I think a lot of it should be by now. I did actually get some DNA, funny enough that I'm talking about it. DNMR. I don't know if I've talked about this one, but this is a perfect example. Look at this stock, $66. It's trading at $3.45. Nothing crazy has changed to make it go from a $66 stock to a $3 stock, hitting, I think, all-time lows today, if I'm not mistaken. Yeah, I nibbled, I think, at $3.50 or $3.55. Got my average down a little bit. I think I have like 500 shares of this one with an average in the low sevens. So not the best. I mean, that's my what I'm talking about. You look at a stock like this, and obviously it's all hindsight by the time you actually, we're looking at it right now, but you undo, a month or two and you go back to here and you look at this type of stock. I mean, it's getting below its SPAC price. I started buying, I think, in the mid eights, high eights, and thought I got a pretty good deal. And then sure enough, here it is, a $3 stock. So a lot of these are just getting hit hard. Once again, I try to cliff notes everything. This company focuses on was it like biodegradable plastics for bottles and stuff like that. And I think a lot of companies are going to start trying to do the whole green thing and just be as eco-friendly as possible. And I know their bottles are already on Amazon's website and stuff, but one major deal with like Pepsi, Coke, and some of these other companies, and obviously it could play out quite nicely. And I think, once again, even at my average of like $7, especially if this is the first time you're hearing about it, obviously not financial advice, but risking a couple $100 in shares or whatever to hide away for 5 years or whatever, 10 years. The way I look at it, these prices, either their product or whatever the company is about will succeed. To what level does it go back to $66? Who knows? But $10 stock, $15, $20 stock, and they actually end up growing, and it plays out like you want, or it becomes so cheap that their potential buyout. What's I think it's a $300 million company, $400 million company right now. What's that to Apple? They made that today. So why not? For $1 billion we'll buy you out, or whatever the case may be. Obviously, there's other companies that would make more sense. I'm just saying companies that have a lot of money. What's them using what they make in a couple hours to buy some of these companies out? And obviously, if they go, they get bought out, maybe the stock goes to $7, $8, $10, $12, whatever the case may be. So once again, at these prices, I think it's something to obviously do your own research, do your own due diligence. But I'm not sure if I talked about this one on the channel before, so I figured I would. Matterport, that's another one that's just been hit. I think I did talk about this one last week. My average is like $12. It's just crazy. A lot of these, I knew about this company months ago, and it was already doing like this up run. And I'm just like, man, I don't want to pay 18 or $20 for it. And then sure enough, the whole metaverse and how that could be applied to it, stock shot up to like almost $38 here. And I'm just like, man, I missed it, but I just don't want to buy it at these prices. And I'm glad I waited. But as soon as it did end up going into the low teens, I think I started buying it at 14 or something, and I've been averaging down a little bit. So this is just another one that's just crazy, where their revenue, their subscription growth was like 98% higher than last year. The overall numbers weren't amazing, but once again, with these growth stocks where they have a good product, and as long as their business model pans out, it's just, like I said, in general, growth is just being destroyed, and we're nowhere near, most of the time when a stock drops 50, 60, 70% and nothing has changed within this for the most part, this is before earnings. So what really changed from $37 all the way down to say $8? I think it was like $7.70, but when it had the report. So obviously the earnings, I think the biggest thing, the takeaway from this company and the earnings was the future growth. I think it was only 20% or 30%. It wasn't as much as I think somebody would, or investors / analysts were expecting. I personally watched the video on it, and I agreed with that. I can't remember which YouTuber it was, but they brought up a good point. Like, companies just trying to be conservative right now with a lot of supply chain issues and everything going on. So maybe it's one of those things is under promise, over deliver. So then obviously a couple of quarters go by, and if it's lower growth, then obviously you have to reevaluate if this is something worth holding. But once again, looking at the stock basically near its all-time low, I think it's something to keep an eye on. Could it go lower? Absolutely. But I always bring up the point, 10 years ago, did it matter if you had Tesla at $25 or $30? Does it matter if you had AMD at $2 or $5? Because yes, AMD got as low as $2. I had shares of it at $2. Would you be upset if you owned NVIDIA at $11 versus $20? Man, that's like almost 100% move. Now look at how much, I'm not saying this is the next Amazon or, Tesla or any of that kind of stuff. But my point is, in the grand scheme of things, if you're an investor or you like something long term, who really cares if your average is $5 or $6 or $8? Obviously, the best location is important. You don't want to it sucked to be the person that bought it at 37.60 because obviously somebody did. Whether they're still holding it or not, who knows? But at these prices, with the information you have in front of you, I think it's important to just obviously give these stocks some time and be able to just be aware of the market conditions we're in. But anyway, actually, I don't think I did this one. We just pretty cool too. This one tracks car data, and I could see, and I think they already have a partnership with Microsoft, and there was one other big company, I can't remember who it was. I think was it Palantir as well. As far as data for cars and stuff like that, and how that could be used, for maintenance, and just almost thinking of the car having internal, like in the sense of traffic, and just being able to make cities and streets and this and that. There's a lot of data, I think, when it comes to this type of transportation, and can be used in other, it's not just for cars, but once again, one that you want to check out for yourself. But just another one, I guess, when it was another SPAC, it merged, shot out to $20 that day a couple months back, and it's just been bleeding out like all of these have done. So could it be a $2 stock? Could it be a $5 stock? Who knows? But once again, you go by what you know, and today it hit all-time lows. So I don't mind nibbling at this. I think I started last week at $4, and I got my average at $4.30. I think I started buying it, and I think I bought some. I obviously bought a little today at $3.55, so a few cents off of the lows, but I don't actually know what my average is on that one. Not that it really matters, but yeah, my average now. Actually, no, it's 440 or 450. My average is like 420 on it. And we'll see if it drops a little more. I'll add. I'm nibbling. 20 shares, 25 shares, not doing anything too crazy, because in this market we know that it could go lower. But you don't want to look at a chart and say, "Oh man, I had a chance to buy here. I had a chance to buy here. I had a chance to buy here," and they get news or a partnership or something big, or just risk on. Just like that, when algos and everything else decide to start buying these small caps again, because especially in an inflationary environment, I would think small caps would do better. You're not going to see the returns you would see on an Apple or Google or any of these other ones. So you have a better chance of making 100% of your money on a stock like this than Apple, doubling, or Google going to 6,000 or whatever the case may be. So I think some of these will do well, but it's more when, not so much if. And then some of these might not make it. That's why you don't really risk that much. Diversify in the sense of finding stocks you like, but don't risk more than you're willing to lose. And I'm personally, I think, in now 75 different things, and 99% of them are all just future growth stuff. I think that will be big in the next 5, 10, 15, 20 years from now, and obviously want to try to, I guess, have a position in that stuff, just so when one of these maybe does become the next Amazon or Google or the next this or that, it's not too much a surprise. Everyone talks about it now, but compare that from 10, 15, 20 years ago, it's one of those, I should have held, or I should have bought, or I should have done this. So trying to not have a case of shoulda, woulda, coulda. Let me look on this list. I'll go over one more. I did buy a good amount today, and obviously members, I screenshotted this so it's on Slack, so they know all 10 stocks I bought today. But WeWork's an interesting one. I don't know if I talked about this one on the channel, but figured I'd bring it up. This one, I like the idea of, and then they try to go public, and they had a scandal or some issues with the CEO who's no longer part of the company, and they were failing in China, and then COVID, they were trying to go public. So it was just like a cascade of bad news and bad timing for this stock. And then here it is in the $6 range. And I've been buying it since the high 9s. I think I got my average down to the high 8s now. But I like this one. I like the idea of WeWork. And for you guys that don't know what they do, it's basically they have buildings where, it's perfect for hybrid work because they rent out the space. And a lot of companies are trying to get rid of headquarters, or maybe they don't need that much space, especially since COVID happened. Companies are either having a hybrid model, people are either remote, but there will be times that you need to be face to face. So, I could see companies, why would companies spend millions and millions and millions and millions of dollars a month in rent when you could pay literally probably a small percentage of that and do WeWork and just rent out, a specific building or a specific room for a week or a day or a month or whatever the case may be. And I think that would probably be cheaper because it's not something you necessarily need to worry about on a monthly basis. It's when you need it. Maybe it's a quarterly meetup, or giving maybe your employees, maybe they have a discount, they have a partnership with some big companies, and give them the flexibility. If it's a project type thing, maybe if you're coding or doing something, it's better to be around other people so you can have it right there instead of trying to be on a Zoom call all day. So I don't think being working face to face is going away anytime soon. I know COVID probably accelerated the whole work from home and being remote, and I'm sure a lot of companies realize they don't need as many buildings, they don't need as many employees, they don't need as much on the back end to run their businesses successfully. So with a lot of that changing, I think WeWork might be a solid pick. Once again, especially 20-30 cents from all-time lows, something to keep an eye on. It also has earnings. Most small caps to mid caps are going to have earnings this week, next week, and the following week. So whether you wait or you jump the gun and get in, you can only go by the information you have in front of you. So buying it 20-30 cents from all-time lows, I think is decent, but with the caveat of knowing that there's a chance that it could be a $5 stock in 2 weeks because of how this market's reacting. But I will say, like I said earlier, is in the grand scheme of a lot of these names, if you think it's going to be a big player in whatever industry or whatever sector it's in, then who cares if your average is $6, $7, $8 or $5 or $4? Obviously, the lower the better, but you never know. There could be a big contract. There could be big news tomorrow that the stock never sees these prices again and just has that upward momentum now. So the path of least resistance in a lot of these is still lower, but I still think it's a good idea to at least start a position. And that is, you want to risk $1,000 in this name, and you do the math on how many shares you can have. Start with risking $250. That you don't want to do a full position size, because if somebody did that at 15, then they're kind of upset right now because they don't have any money to average down, and now they're down 60 something percent. So just something to keep in mind. But yeah, like I said, I was pretty light today. 1 or 2 futures trades. I nibbled on some of these stocks. I went over 3 of them of the probably 10 I bought. Like I said, if you're interested, you can become a member and get that full list. It's on Slack. And as always, like I said, hopefully it's been helpful. You guys have a wonderful night, and I will catch you at the next one. Take care.